In today's video, I'm going to reveal my number one stock pick for October 2025, an opportunity with a 50% upside that you can't miss. I'm ATP and let's get started. Firstly, I want to thank XTB for supporting this video. XTB offers 0% commission on both real stocks and ETFs, with a minimum transaction value of just €10. These conditions apply to monthly volumes up to €100,000, and above that, there is just a 0.2% commission. If you are new to the platform and want help getting started, check out the full step-by-step tutorial linked in the description. And here's the best part, if you open an account using the code ATP, I will give you not 1 month, but 1 year of free access to our premium investing group, where I share my full portfolio, trade alerts, ETF strategies and much more. You don't even need to deposit any money, just sign up, send us a screenshot and we will activate your access immediately. Now let's start with a quick update on my portfolio. This month I didn't close any positions, instead I've been holding and letting the investments grow, and it's been a good decision so far. Right now the portfolio is sitting on about €2,400 in unrealized gains, which is approximately $2,800. My best performing stock so far remains Amazon, which has delivered an impressive return of 79% since I bought it. Looking at the broader market, the S&P 500 has continued its bullish momentum. After breaking above the $6,100 resistance in July, it pushed even higher in September and is now trading around the 6,600 level, a brand new all-time high. This confirms the strong bullish trend we have been tracking for months. But here's the key point. Prices are getting very high and valuations are becoming stretched. That's why it's not only important to keep an eye on which stocks we might want to sell, but also on where we can still find opportunities to buy. And that brings us to today's top stock pick, Fiserv, with the ticker FI, a company that I believe offers exactly that kind of opportunity. Fiserv is one of the leading players in the global payments and financial technology sector. The company provides services like payment operations, banking solutions, and risk management for thousands of financial institutions around the world. With a strong client base and consistent growth, it currently ranks as the 300th largest company worldwide by market cap, highlighting its solid position in the industry. When we look at the long-term chart of FI, we can see that historically this has been a very stable stock. Since the beginning, the price has followed a clear upward trend, consistently staying above the 600-period SMA, which has acted as a long-term fair value line and a strong support level. Even during major events like the 2008 financial crisis, the stock only dipped slightly below this line before quickly recovering and restarting its bullish trend. And the same happened in 2020 when the price respected the SMA as a support. However, most recently, FI went through a sharp correction, dropping about 46% from its highs, one of the sharpest declines in its history. So, what caused this move? The main reason was that the stock has become highly overextended. As we can see from the distance between the price and the 600 SMA, valuations were getting stretched. And when that happens, most of the times it triggers heavy profit taking, and that's exactly what we saw. At the same time, the latest earnings, while overall solid, showed slower growth, especially in their Clover point of sale system. However, in my view, this was mostly a healthy market correction after the stock has been trading at extreme levels. So now the question is, does this correction actually give us a buying opportunity? To confirm that, let's move on to the fundamental analysis. Firstly, let's start with one of the most famous valuation models, the discounted cash flow, or DCF analysis. To simplify the calculation, I'm using Finbox, which automatically computes the DCF using 3 different methods. Using the growth exit formula, which assumes the company continues to grow fairly for 5 years, we get a fair value of $187 per share, representing a 41% upside. Next, looking at the EBITDA exit multiple, which values the company based on its operating profitability, FI shows a fair value of $202 per share, offering a 52% upside. Finally, using the revenue exit formula, which values the company based on its total revenues, we get a fair value of $165 per share, meaning an upside of 24%. Moving on to Simply Wall Street, their premium platform aggregates forecasts from 30 professional analysts and estimates a fair value of $212 per share. That means the stock is currently undervalued by 36%, which is a big discount. Next, we have MarketBeat, which combines predictions from 25 analysts. Their average 12-month price target is $207, translating to a 54% potential upside. Using alpha spread, the base case gives us a fair value of $231, showing the stock is undervalued by 42%. And if we dive into their financials, we can see that FI has delivered strong and consistent growth for over a decade, with stable margins. Now let's look at value investing, which combines multiple models and analyst opinions. Their estimated fair value is $187, based on input from 42 analysts, which still give us a very healthy 39% upside. According to Guru Focus, the stock is worth around $169. Stock Rover gives us a fair value of $186, while Stock Analysis, which aggregates opinions from 25 analysts, estimates a value of $214. So, putting all of these numbers together, we calculate the average fair value to be approximately $196 per share. And considering that the current price of FI at the time I am recording this video is around $134, this gives us a potential upside of 46.4%, which is outstanding for a large cap and stable company like Pfizer. So, based on both technical and fundamental analysis, this looks like a good opportunity. Let's now head over to XStation 5 and add Pfizer to our portfolio. After logging into your XStation 5 account, go to the Market Watch section. In the search bar, type FI and be sure to select the stock version, not the CFD. Once you have selected it, click the chart icon to open the real-time chart and review the current price. Now, right-click on the chart and select New Order. In the order window, type in the number of shares you want to buy. In my case, I'm going to buy 1 share. Once the quantity is set, click the green buy button, confirm your order, and that's it. If you enjoyed this breakdown, don't forget to like and subscribe to support the channel. And if you have a stock you'd like me to analyze in one of the next episodes, make sure to drop it in the comments below. And remember, if you want 1 full year of free access to my premium investing group, all you need to do is open an account with XTB using the code ATP. Thanks for watching, and as always, happy investing. Bye bye.